Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at AMD.
If you find our talks useful, please consider subscribe, like, and comment underneath.
And think of today's talk as your definitive audio summary for AMD heading into this year. Because looking at the data today, it's Friday, February 27th, 2026, and the energy around this company is just, it's completely different.
It really is. For the last decade or so, whenever I looked at AMD, I had this very specific narrative in my head. It was almost like a reflex, right? I thought of them as the scrappy underdog.
Right, the little sibling.
Exactly. The little sibling trying to keep up with Intel and processors or trying to chase down NVIDIA in graphics cards. They were always the value option, the second best. But looking at these 2025 numbers, that narrative feels totally obsolete.
Oh, it is obsolete. The data from 2025 didn't just, nudge that narrative. It buried it. If you are still looking at this company as just a cheaper alternative to the big guys, you are missing the fundamental shift that has taken place in the whole semiconductor landscape.
So let's unpack that shift for the listener. What is the big headline? Because I see a lot of massive numbers here, but what's the actual story behind them?
The headline is Scale and Transformation. Record full-year revenue hit $34.6 billion.
Wow.
Right. Now, that is a massive number on its own, but if you just look at the top line, you completely miss the texture of the business. The real story is about where that money is coming from. It's about the engine under the hood.
And that engine is the data center.
Exactly. The data center segment isn't just growing, it is exploding. It brought in $16.6 billion on its own.
Just by itself.
Just by itself, that is up 32% year over year. To put that in perspective for you, the data center business alone is now almost half of the entire company's revenue.
That's wild.
They aren't a PC company anymore. This is a data center infrastructure company that, well, happens to sell some consumer chips on the side.
That 32% growth figure is impressive, but I was digging through the quarterly breakdown, and the Q4 numbers looked even hotter. It seemed like things were actually speeding up as the year ended.
You spotted the acceleration, and that is key for the momentum thesis here. You never want to see a company slowing down as it hits a record, right?
Right, you want escape velocity.
Exactly. In the fourth quarter of 2025, data center revenue hit $5.4 billion. That represents a 39% jump. So the annual growth was 32%, but the exit velocity heading into 2026 was nearly 40%. They are gaining speed.
That's a great sign. But usually, when we talk about these massive tech pivots, like when a company goes all in on a new shiny object like AI,
The legacy business suffers.
yes, the cannibalization effect, the old business dies while the new one grows. But that's not what happened here, is it?
No, and that was the genuine surprise for me in this earnings data. The legacy parts are actually working. Client revenue.
That's the laptop and desktop CPUs.
Yeah, your standard consumer processors. That came in at $3.1 billion, up 34%. And gaming, this is the one that really shocked me. Gaming actually grew 50% to $843 million.
Wait, hold on. Gaming grew 50%. I thought the console cycle was supposed to be in a lull right now. I mean, usually 5 or 6 years into a console generation, sales start to dip.
They do, but AMD captured market share. It wasn't just about the broader market growing. It was about AMD eating someone else's lunch.
I see.
They've seen massive uptake in handheld gaming devices and high-end components. So you have the AI rocket ship firing on all cylinders, but the boosters from the core business didn't fall off. They fired up too.
So we have record revenue, everything is growing. But let's talk about the bottom line. Because for a long time, the knock on high-growth tech, especially in the AI space, was that it's expensive.
Very expensive.
You burn cash to build fabs, you burn cash to secure memory. Is AMD actually making money, or is this all just growth at all costs?
Not here. This is a cash-generating machine now. Gross margins are sitting at a very healthy 50%. Net income for the year was $4.3 billion.
Okay, let's pause on that. $4.3 billion in net income.
Yeah.
That changes the conversation entirely. It moves from can they survive to how much cash can they throw at the next big thing.
Precisely. That is what we call a war chest. They aren't borrowing at high interest rates to keep the lights on. They are funding their own R&D. They are reinvesting that cash into the MI400 series and the Helios rack scale solutions. That is the privilege of profitability. It gives them total strategic independence.
So that's the rear view mirror. 2025 was a banger.
Yep.
But markets, and obviously you listening at home, don't care about what a company did yesterday. We care about tomorrow. We have to talk about where this goes next. I know CEO Lisa Su dropped some forecasts that really raised eyebrows across Wall Street.
She didn't just raise eyebrows, she planted a flag. The guidance is aggressive. She is forecasting data center revenue growth to exceed 60% annually for the next 3 to 5 years.
60% annually.
Yes.
For up to 5 years. That is compounding at a rate that is hard to even wrap your head around. That's exponential growth.
It is. The goal is explicitly stated. They are scaling the AI business to tens of billions by 2027. We are talking about tripling or quadrupling the current AI revenue in just a couple of years.
Okay, bold claims are easy to make on a PowerPoint slide. The question is why? What is the moat? Why does she think they can hit 60% when competition is this fierce? We know NVIDIA is the 800-pound gorilla. We know Intel is trying to wake up.
It comes down to two pillars: product leadership and market dynamics. On the product side, you have the EPYC CPUs for servers. They are continuing to take market share from Intel because they are simply more power efficient.
And power is everything right now.
Exactly. In a data center, power is money. If you can do the same math with less electricity, you win the contract.
And the second pillar.
The NVIDIA alternative angle. And I don't mean that in a second best way. I mean it as a strategic imperative for the customers. Think about the hyperscalers.
Microsoft, Meta, Google.
Right. These companies are spending hundreds of billions on infrastructure. They literally cannot afford to rely on a single supplier.
It's basic supply chain security. You never want a single point of failure.
Exactly. They need a second source to keep costs down and supply chain security up. They actually need AMD to succeed. If AMD didn't exist, NVIDIA could charge whatever they wanted. So these massive tech giants are actively helping AMD optimize their software just to ensure there is competition in the market.
Which brings us to the elephant in the room. Or maybe I should say the meta in the room.
I see what you did there.
There is a massive catalyst here that we need to highlight, because this seems to be the linchpin of the 2026 thesis.
This is the crucial detail. If you take one thing away from this audio summary, it's the Meta deal. The data highlights a partnership for a 6-gigawatt deployment starting in the second half of 2026.
6 gigawatts. For those of us who aren't deep in data center engineering, can you explain the scale of that? Because gigawatt sounds like something from a sci-fi movie.
It is enormous. To give you a mental image, a typical large nuclear reactor produces about 1 gigawatt of power. So 6 gigawatts represents roughly 6 nuclear power plants worth of electricity dedicated entirely to this compute infrastructure.
That is mind-blowing.
It's a city-sized consumption of power.
And they are using the custom MI450 chip for this.
Yes, this is their next-gen silicon. And this deal does two critical things. One, it provides a guaranteed revenue floor that is absolutely massive. This isn't speculative sales, this is contracted.
And the second thing?
It validates the technology. If Meta, one of the most sophisticated AI companies on Earth, is willing to bet 6 gigawatts of infrastructure on the MI450, it proves the chip works at the absolute highest scale.
That is the stamp of approval right there. It moves AMD from experimental to mission critical.
Exactly. And that deployment starts in the second half of this year, 2026. So
Right.
the revenue recognition starts in the book soon. It de-risks the financial outlook significantly because the customer is already locked in.
All right, let's pivot to the charts. We know the fundamentals are rock solid. We know the future pipeline is massive. But how is the stock actually behaving? Because early 2026 was, well, it was a little rocky for the whole sector.
It was. We saw a sell-off across the board in January. There was some macro fear, some sector rotation. But looking at the technical setup now, we have a very clear confirmed bottom in early 2026. The sellers essentially exhausted themselves.
And the rebound wasn't subtle, was it?
No, not at all. In the second week of 2026 alone, we saw a 15% gain. That is a massive impulse move.
Right, when a stock the size of AMD moves 15% in a week, that isn't retail traders buying on their phones.
No, that signals that the big institutional money, the hedge funds, the pensions, step back in to buy the dip.
I noticed something interesting about its resilience, too. NVIDIA took a tumble recently, kind of dragged the whole sector down for a day or two, but AMD seemed to shrug it off better than usual.
That is relative strength. When the sector leader sneezes, usually everyone else gets a cold. But AMD held its key support levels. It tells me that investors are starting to decouple the two stories.
They aren't trading in lockstep anymore.
Exactly. They see AMD has its own specific catalysts, like that Meta deal, that aren't dependent on NVIDIA's earnings call. It's maturing as an asset.
And the balance sheet is clean.
Very clean. No excessive debt highlighted. Like we said, $3.7 billion in operating income. They have the war chest to weather any storm. If the economy slows down, they don't have to panic. They can keep building.
Let's talk sentiment. What is the vibe out there?
Yeah.
Because sometimes the numbers are good, but the street just hates the stock.
The vibe is overwhelmingly positive right now. Looking at the sentiment scores in recent headlines, you're seeing titles like AMD's no-brainer once more, and it's popping up on lists like unstoppable tech stocks.
Unstoppable. I like that word. It implies momentum that can't be easily derailed.
It's a strong word, but it reflects the reality that the AI bubble fear is shifting into an AI infrastructure reality phase. People are realizing that even if the hype cools down, the build-out of data centers is a multi-year construction project, and in that phase, the hardware makers win.
Okay, I have to do my job here. I have to play devil's advocate. We are painting a very rosy picture. Record revenue, meta deal, technical breakout. What breaks this? What is the bear case that keeps you up at night?
It's important to look at the risks. We can't just drink the Kool-Aid. The first one is obvious: sector volatility. If the AI narrative suddenly collapses, if people decide AI is a fad that doesn't generate profit, or if NVIDIA crashes hard, the whole chip sector falls in sympathy. It doesn't matter how good your earnings are if the tide goes out.
Right. The baby gets thrown out with the bathwater.
Exactly. Risk number two is competition. We said Intel is losing share, but Intel is still a giant with government backing. If they wake up and produce a great server chip, that easy market share goes away. Or if NVIDIA gets aggressive and cuts prices to kill AMD's margins, that 60% growth target gets much harder to hit.
And hardware is famously cyclical, right? Boom and bust.
Historically, yes. That's risk number three. We could build too many data centers in 2026 and then have a pause in 2027. That's the classic semiconductor cycle.
But
I hear a but coming.
the rebuttal to these risks, and why I remain bullish, is that the meta deal changes the calculus on the cyclicality. When you have a multi-year contract for 6 gigawatts of deployment, you have visibility.
Because they're locked in.
Exactly. You aren't guessing if customers will show up next quarter. They are already contracted. It creates a floor that protects the stock.
That floor is vital. It creates a safety net. Okay, so for you listening, whether you're holding the stock or thinking about entering, what is the calendar? What are the dates we need to circle in red for the next 3 months? We have a few big ones. First up, Q1 2026 earnings. Those are coming in late April or early May.
What's the whisper number there? What do they need to show?
The market is expecting to see that 60% plus data center growth trajectory confirmed. If they miss that, or if they guide lower, we have a problem. But if they hit it, it validates the entire annual guidance.
And what about product launches?
We are watching for the product ramp of the MI450 later in the year, but in the short term, watch the industry conferences. We're expecting them to show off that Meta partnership. If they put a Meta executive on stage with Lisa Su, shaking hands and talking about the future, that is a massive catalyst for the stock price. It makes the deal real for the retail investor.
Okay, we've unpacked the earnings, the 60% forecast, the massive Meta deal, and the technical rebound. It's time for the verdict. What is your score?
I'm giving this a 9 out of 10 bullish score.
9 out of 10. That is high confidence. Give me the elevator pitch. Why does it deserve a 9?
It's simple. You have a record $34.6 billion revenue base that is incredibly profitable. You have a verified 60% growth trajectory in the most important sector on Earth, the data center. You have the Meta 6 gigawatt deal that validates the technology at scale. And technicals show we're rebounding from a confirmed bottom. You aren't buying at the top, you're buying at the start of the next leg up.
In the time horizon.
No.
Is this a quick flip? Do we buy now and sell in May?
No, this is a multi-year hold into the 2027 AI scale. You buy it, you tuck it away, and you let that compounding growth do the work. The thesis is that AMD becomes the Pepsi to NVIDIA's Coke, a massive, profitable giant in a duopoly.
I love that analogy. Before we let everyone go, you mentioned something in the pre-show notes about agentic workloads. That sounds like sci-fi. What does that actually mean for the investor?
This is the final thought I want to leave you with. Right now, most people use AI as a chatbot. You ask a question, it gives an answer. That uses a lot of GPUs. But the shift is moving toward agents. AI that goes off and does a 10-step task for you. It researches, it codes, it checks its own work.
Like an autonomous employee.
Exactly. And here is the secret. Agentic workloads require way more complex reasoning. They don't just need the raw speed of a GPU, they need the logic and control of high-end server CPUs to manage those tasks.
And AMD dominates that server CPU space with EPYC.
Correct. So as AI gets smarter and more independent, the demand for AMD's core product doesn't go down, it goes up. We might be heading into a hybrid compute era where you need a massive CPU alongside the GPU.
Yeah.
That is the perfect storm for AMD's specific portfolio.
That is a fascinating angle to end on. The smarter the AI, the more silicon it needs across the entire board. Thank you for breaking this down.
Always a pleasure.
And thank you for listening. We'll see you tomorrow on Smart Wealth with Joshua.